Hello. Trading has closed on August 15th, 2022. Let's start with our disclaimer, go over our calls, and make some predictions. It's my trading plan for tomorrow, but I won't be trading. I'm busy all day. Just remember, I can be completely wrong, and any trade you make should be at your own risk. We had a few calls. We'll look for the pattern with the early low and the late high. Tends to be a rally day with a high and a final hour. We got that. We had a target 42.5224. The equivalent price of this target did print in overnight futures, but I count it as unsatisfied or a miss if we don't see it in regular trading hours. So even though it had relevance in the overnight trade, I count this as an unfilled target, a miss, and we'll have to add it to the list. There's a new target based on today's patterns, 42.6349, and unless we gap up smartly, the rules call for it to print by early Wednesday. We also said gapping down smartly was very negative. I never defined smartly, but that sure looked smartly to me at the time. When we filled the gap and started down, we had a perfect condition for the drop to continue, but the idea that that would be very negative did not work. We rallied the rest of the day. This is what we said. Tomorrow has the early low. We got a sell signal in the morning from MEJT. We did drop, but not enough to satisfy it. We should trade lower than this low, gives us the target for tomorrow. We got an ultimate buy signal in the afternoon. Didn't tell us the next move, but it did tell us the drop was false, and ultimately we did see the higher price. We went over this trend line. We said that if we did it without gapping, which is what happened, it should retrace to the trend line. So we have a new target of retracing to the trend line. I'm not certain this trend line's been violated with enough conviction for me. We should return to it, but if we drop right from here, particularly if we get down at the open, which hasn't happened yet, that I don't think it's enough of a violation to really kill the idea. We're now running into a declining 200-day moving average, a straight line drop from this far under that average while it's declining should not go too far on a closing basis past this line. Now, if the line flattens out, of course, that doesn't apply. But it's still declining, we're still going up to it, and it should offer resistance. Let's count the waves here. We did trade higher today, but you don't have to change the count very much to make this work. You can now count this as a 5-wave structure pretty easily, with magenta 5 having a fib relationship to magenta 1 through 3, and gold 5 having a fib relationship to gold 1 through 3. Doesn't make it right, but at least there is a count compatible with this being over. Personal business this week, might not post tomorrow. Tomorrow's pattern has the early low. We could still gap up. There's a lower target. Unless we gap up smartly, the rules call for it to print. Day-long rally couldn't manage a close over midday highs. If that's maintained at tomorrow's open, lower prices should print. There are a number of unrelated timing systems. They're not my systems, but seem to be pretty good. Call for a change in trend over the next week. All these times of other people, they don't fall on the same day, but they all happen the next week. We should be running into trouble based on the straight line rally to the declining 200-day moving average. I suspect we'll start a reversal fairly soon based on time rather than based on price. But until that happens, you're standing in front of a freight train here, so I'd be alert for a reversal pretty soon. I expect a reversal pretty soon, but it hasn't happened yet. And until it happens, you just have to use any stop if you want to go short. Tomorrow has the early low, and the ability to close over these highs is negative. Either we take out today's highs fast, or we should see lower prices even if we don't close lower. And that's today's call.